So we are taking Fibonacci today. We went through support and resistance the last time. The SR2 supports, resistance, trend line, all those things. They are just us trying to find more confirmation before taking the trades. So the more confirmations we have, the more chances of getting a higher win rate. And even you yourself, when you see a trade giving you like 4, 3, 5 confirmations, you will be more confident in taking that trade. It happens at times when you just open your chart and you see a very short trade. Maybe you are seeing your indicators giving you like 4, 5 indicators giving you like a signal, okay, this market is going to go up. Then you rush to your broker to want to take that trade. Moments like that. And eventually you see that trade goes your way. So it's better to have more indicators, it's better to have more strategies to test and use together to get more confirmation and more wins. So Fibonacci is a very great tool. It is a game changer. It gives you more trades. At times it can be tiring for you to wait for your support and resistance all the time. And if you check through the chart, in between the chart, you see the chart moving in between the support and resistance. Stopping at the point, moving back, stopping at the point, moving back. You don't know what is causing it to stop at that point. So that's where trading with the Fibonacci comes in. You get more trade opportunities using the Fibonacci. So the first thing I want to say is this. The Fibonacci works more to give you more trades in a consolidating market. And the moment you see the market break out of that consolidation, you change your Fibonacci, you retrace it again, you draw it again. Once you see your Fibonacci broke, you draw it again. So now your P2, I want to show you the settings of the Fibonacci I use. So you guys can, your P2 will be here. If you press this tool here, it's called the Fib retracement. You can start it, so it will be part of your tools down here. So once you choose the Fib retracement, you come to the settings. So now you change the settings to what you're seeing on the screen right now. You have the 0, 0 0.5, 0 0.705, the 1, the 0 0.382, 0 0.618, and 0 0.786. Those are the levels we need to take our trade to the Fibonacci. Then you come here, you change your labels to white. And it depends on how you want the background to be, how deep you want the background to be, you can change this. So I think that's fine. I'm going to wait for a little while so you guys can check the settings very well. So that's the settings you need. And take note of the colors as well. You can choose any color you like, but these are the colors I use. Okay, so that's the settings about the Fibonacci. So how do we use the Fibonacci? First thing you do is, once you get your setup, your trade, first thing you do is, first thing I advise, because I teach what I do. I teach people the way I trade. So I draw my SR2 first. I mark up my line. I do my support and resistance, and everything is there. So the moment I sight a consolidating market, what do I call a consolidating market? Maybe you see a trend that is going up, then it's now coming back down. You see a trend that is going up, then you see it retracing. That's why it's called the Fib retracement, right? It's called the fib retracement. Maybe the market is shooting up, then all of a sudden you see it moving within a range. That's all for the consolidating market. The consolidation market. So now, this is a perfect example right here. This market was shooting up, coming down, shooting up. Then all of a sudden, we see it stalling, waiting. We see it stalling and waiting. This is the perfect timing to use the fib tool. You see it moving within a range. It's not really moving in this direction anymore. That's the perfect timing to use the fib. So now, how do you draw your fib tool when you see that perfect opportunity? You see the market stalling at the point and you want to take the trade profit. So what do? We just pick it up. We get the body of the last movement, where the last movement started from before that consolidation. You are not coming down here. This was the last movement. This was what this was the last retracement before this shoot up. So you get the body of that last shoot up. Then you get the top of the shoot up as well. What do I call the top? The place the market went to before moving in between that range. This is the top place right here. You get the body and not the wicks. If you can look closely here, right? I did not put this line at the wick, I put it at the body. And at the top here as well, you put it at the what? At the body. You put it at the body. So this will be how you would have done your fib retracement. This would be how you would have done your fib retracement. So what do we do? How do we use it? How do we take our trade? I will show us so many examples so you see how it works and how you will be profitable using it. How many trades it will have given you, right? Okay, now so this was moving here. You know, obviously you will draw it right here when you see the market retracing back down. The moment you see the market retracing back down, that's when you draw your picture. You get from the lowest body to the highest body. So now we've gotten the lowest, we've gotten the highest body. What are we looking for? Now we are waiting for the market to move in between our 0.5 level and 0.618. I will take that again. The moment you see the market getting into from the 0.5 to the 0.618, that's what we are waiting for. This pink zone. Yeah. That's what we are waiting for. That's where we are looking at. So once we see the market, at times I take it once it hits the 0.5. At times I wait for it to move down a bit. Once it's inside this zone right here, you can wait for it to hit the 618. You can take it while it's inside in between the two. You can take it while it hits 0.5. You take your trade. If it was an uptrend, that means you are drawing from the bottom to the top. So that means you are looking for a call once it hits your 0.5 to the 0.618. So now, this market was moving. We've drawn our picture. We saw the market moving here. This red line here was the first one that moved in between the zone. And as you can see, if we took the trade, you will win the trade because it went up. This was the second time it's crossed in between the zone. And as you can see, what happened? It shut off back. I think those are just the two trades that came within this zone here. Those are the two trades we would have gotten within this zone right here. So let's look for another one. Uptrend. We are treating uptrend right now. I'm trying to see as many as we can get. Okay, now I see another one here. We saw this market pushing up right here, and all of a sudden it was moving in between the range, right? So let's say you want to draw your picture right now. This was the last push before it happened. That's the low we are trading right now. And where was the highest at that point? Now, guys see, you won't choose this one because obviously you won't. This won't be the time you are trading. This will be the time you saw the market retracing down. So this will be our high point at that time. I want to teach us to be okay. This market is actually active right now. How would you set it to get your trades, right? So now we saw this market shooting up and it was retracing down, right? So as we can see, what happened? Let's see together. So now we drew it right here. The market was coming down, so we got this stuff right here. So now, as you can see, when this market entered the zone, I said, what happened? It pushed back up. It pushed back up. It's as simple as that. You just take your trade in between the 0.5 and 0.618. It's not necessarily that it has to hit that point of 0.5 or that point of 618. There are other things you can use with it to get more winning trades. But I'm just teaching the Fibonacci on its own now. I'm not teaching it with the support and resistance yet. How to trade the Fibonacci on its own. That's what we're teaching right now first. So now once it enters your 0.5 and 0.618, you take the trade. Sometimes I take it in between this zone. Then if I see the market still going down, then I take the second entry around the 0.618 and 0.705. If I see it still going down, then I will have to roll this obviously. So these three zones are the three trades you take. Because at times it might not retrace here, it might come today. But anytime you see the trade going beyond the 786 level, just leave that trade. We are looking for the retracement between the 0.5 to the 0.686, 0.786. But most times, the market retraces at the 0.5 to the 0.618 level. Now, can we say this fib is done? No, it's not. Most times, when you see it broken like this and it reverses back instantly, it's not like it gets going up. It reverses back instantly. All you need to do is you don't put this at the new high. No, you still maintain that high, but just draw it a little bit further because the market will always come back to your level. This is what we call a fake breakout. It was not ready to move yet. The moment you see the market moving here and this resistance was not pushing it up, it kept coming down, just draw your fib to the next price and you wait for it to hit your level and you take your trade again. Okay, now let's see together. You can see the market came to our level here. What happened? It shot up. We did not get this new high here. We did not put this high there. If we put it there, then we'll be looking for another level, right? Which will make it more complicated. You just maintain your high. The moment you see your high get broken and the market did not come back there, just you have to withdraw your fib at that time. But once you see this big breakout where it goes up then it comes back, you just draw it, maintaining that your line. Once it comes to your level, you take your trade. It's as simple as that. That's uptrend. So let's count the number of trades we have gotten with this low and high here. This is 1. This is 2, 3, 4. It came 3 times. This one did not touch, so I won't count it. This is 5, right? This one came, you would have taken one here. If you rolled it over, you will get it. You would have taken another one. That's why I said I will take another entry when it moves past this. But we can see it actually went backward. It might just need 1 or 2 rollovers. I do 2 rollovers max. 2 rollovers. So that's how Fibonacci works on my uptrend. Let's try and see, look for a downtrend. Let me see if I can get a downtrend market. Where would I explain this? This is still an option. Use Fibonacci according to the trend. Don't go against the trend. Okay, this is a downtrend market. Okay, when do we know when to use the Fibonacci? This market was moving, retracing, right? It did not stall for a longer time at any point here, but it did when it came here. This is not a very good example. Let me see if I can get a good example where the Fibonacci will actually be more good. Okay, I'm seeing one right here. This was a downtrend. It came here, then it started moving in between the zone. Started moving. Actually moved in between the zones for a very long time. A very long time. So now, you saw this market. Let me show you. This was a downtrend, right? You can see the market was coming down. Now, you saw this market shooting down, then started retracing back again, and it is a downtrend. So what do? You draw your fib. You get that last shoot down, the last shoot down, the body. Remember, we are getting the body and not the wicks, and the point where it started reversing. So now, okay, let's even say we take it for it from here first. This market has not happened yet. And I want to show you something. I want to show you a perfect example of how Fibonacci will give you enough thoughts. So now this market was moving from here. So moving from here down. Then it started going back up from here. Can you imagine? Can you see how it started going down from our zone? When it entered the 0.5 to 618, it shot back down. Okay. So now you look for the last point where the market started reversing before consolidating. The last point where the market actually got the push before consolidating, and the point where it's reversing. So in between that consolidation, you take your level 0.5 to 0.2. It's as simple as that. It's as simple as that. Now, to get more out of this, here is where the trick is. To get more out of this, if you actually want to be profitable with this, to get more out of this, that is when you using it with your support and resistance will help you. This was a downtrend, right? Now, see how many trades you have gotten here. This was the last push down before the market fired, and it started reversing here, right? So this will be your low. So now let's count how many trades you have gotten in this trade. So now, let's count how many trades you have gotten in this trade with just the fee alone, right? So now this was the last push down. We've gotten the body. This was where it started reversing. This was where it started reversing. So now, when it hits our level here, you would have taken the trade. This will be 1. It hits it again here. This will be 2. It did not get here. When it hits it here, this will be 3, 4. You would actually miss this, but if you roll it over, it actually came down again. That's why I said I will take the first entry here, second entry here, then third entry here. At times, when I see this kind of market shooting up, I will wait and roll my entry over here, obviously. You would have gotten this as well. you would have gotten this as well. So that's just how it keeps going. You have to keep doing it that way till it eventually breaks your range. You see, you would have gotten this as well. If I extend this a bit, let me see. Okay, let's put it to the point where it's actually good. Okay, see. So this will be like 7 or 8 straight already that you have gotten with this before it was broken here. So now you get more out of Fibonacci. It is when you use it with your support and resistance. So now if you have your fib level aligned with a previous support or resistance, that's even more comfortable trade to take. For example, let me show you something. See this right here. This was a resistance here, it was a resistance, it was a resistance. And when it was broken here, it was support, right? It's nice support here, which was our 705 level of our fib, but it should not be so at that time. It will be our 705. But let me show you where it will be. This actually turned to an uptrend, right? So now if you use your fib level, I want to show you an example of using your fib. So from the down here to where it started reversing. I want us to see this very well. This is now an uptrend. It has broken our downtrend, right? So now we are drawing from the low here to top. Now check something out. Our 705 level is aligned with our previous resistance, which we know it is now broken and it will be our support. So now taking your trade at this level here is you using two different confirmations entirely. Two different confirmations entirely. It was a resistance and you know it will be a support. You know, you just trading your support and resistance already will give you this trade already. But now you using your Fibonacci actually at the exact same level your fib is more comfortable to use it to. And guess what? It came back there again. It came back there again. And the market kept pushing it up. So that's an example of using your fib and your support and resistance together. Using your fib and your support and resistance together. Let me see an example of a fib where it is. Okay, I think I'm seeing you. You know, we are now on an uptrend, right? This is actually going up. So we are looking for a point whereby the market started consolidating for a very long time, which we can see here. This market shot up, but instead of going up, it started moving in between the range. So what do you do? Once you see this kind of market shooting up and it's coming back down, that's when you draw your fib, right? So you get your fib too. You get the body. We are not doing the weeks. We don't do the weeks. We get the body. So now let's see how many trades we'll get here. So now we've got the body here, right? We've got the body here, the body of the top. So now this market was coming down. It got to our peak level. What do? We take the trade. What did you see that happened instantly? It went back up. It came back down to our 0.5 level. It went back up. Then it entered here again. What do you see this candle doing here? It went back up. Before this one eventually came to our 7, which is the last level I told you to take. If you took this 786 level, it will still go back up. Now, it kept going. You know, our zone is not yet broken yet. It's still active. What now happens when the 786 level up? It came back there, here. This will be another trade here. So this will be 1, right? 2, 3, 4. This will be 5. Before this was eventually broken. That means the market is now ready to to continue the trend. But you would have taken enough trade That's why I said it earlier that the tip gives you more trading opportunity, gives you more trade setup than you waiting for support and resistance. On the normal level, right? If we don't have our tip here, this will be all we'll be looking at. Let me show you. We'll be looking at this as our support, right? This as our new high. Then the market actually went back here, so we can mark down on this was the previous support here, which is broken here, but it's held here. So now, how many trades will you eventually get even just this support and resistance? Maybe when the market came down here, we would have taken it, we would have taken this, we would have taken this up. No, we won't take this because this was the first time it formed that resistance. But if we took this right here, we would have lost the trade because we are expecting this to push the market down. But this new resistance was formed, right? So you waiting for this market to hit your support and resistance will take longer time than you can see how many trades we actually got with the fib. Now, you using your fib and your support and resistance together, you can see how many trades you even get more. It's just as simple as that. So we use our Fibonacci to take trades, but I don't just take trades based on Fibonacci alone. I use it with a previous support already. So if the market is retracing here and is now retracing to my 618 and 0.5 level, right? And I'm seeing a resistance at the 705,618 level. I won't take it at this top level. I will wait for it to hit that my resistance at the second level before taking the trade. Because then I'm not just using the fib, I'm using it with the support and resistance. So the more you practice with it, the more you see how you can make use of it to have more win rates and losing trades. To have more win rates and losing trades. So let's see. I want to say so, like I said, once you see a trending market, the fib doesn't really give you much. It doesn't really give you more trades because the market will just keep shooting up. The only thing you can get in the trending market is maybe the 318 level or the 0.5. So just retrace to the 50%, then should back up again, 50% should back up again. So, but once you see a consolidating market, the market is not really moving much. That's when you use your fib. Okay, let me show you this small, tiny consolidating market and how many trades we can get from this right now. This was the last point of the shoot up, right? So this will be the place we will get. And where did it start retracing? This is the top where it started going down. So now let's see how many trades we will eventually get this trade. So it shot up, it came to our level. If we took this trade, this will be 1, this will be 2, and I think this will be the 2 trades we would have taken. The consolidation was not much. It didn't last long before it was broken again. So it's just as simple as that. You look for a consolidating market. And like I said, if you are on an uptrend, you draw from the bottom to the top. If you are on a downtrend, you draw from the top to the bottom. Okay, as I was saying, on a normal day like this, you seeing this market right now, you won't know you can actually take trades between this consolidating market. You'll be like, okay, there's a resistance here. Let me just wait for this to retest the broken resistance to retest it. Then I take my trade, right? But there are actually trades you can take in between with the fib, in between this small thing you're saying. So that's why I said the fib just gives you more trades to trade instead of you waiting all day. But you don't just trade them, you use this aligned with the support and resistance that are formed in between as well. So now you seeing this from afar now, you be like, okay, because of this market, maybe when it hits this top here, you take the trade. When it comes back, you take the trade. But it is until when you now open it, you go in deeper. That's when you see what I said. And you just do what you get that point, it shut up before it was returned there. That's where you get. And you get the body inside the week. And you take your levels. Your 618 level, your 618. This is two trades you can take in between that small consolidation that one was looking at as no, you can't trade right now. Change it. And that's just how it continues. Okay, now this is another form. Now let's try it here. Let's see how many trades we can get from there. So now, where was the point the market actually went up here? This was the point, right? So we get here, right? The market went up. And where was the point to started reversing? Started reversing here. No, it started reversing here. This was where it started going down. So now, this market is still active. You can see it's still moving in between the range. It's still consolidating right now. These are the kind of market you use the peak for to see more. If you see this from outside, like in between the chart, you'll be like, no, this market is consolidating. I don't want to trade it. But the peak has made it very easy for you to get good trades in between. See now, if you took your 610.5 level here, this would be one. It came back there again. You can see it's shooting up. This will be like 6 already, I think 6 candles, 7. This one went down a bit, but it came back up. And now we can see it above the 618 level. We can see it's actually still pushing the market up right now. In between the consolidation, better than you waiting for the support and resistance. So it gives you more trade, but using it with, if I want to take this kind of trade right now, I will just have to look back. If I check back, you can see that this has actually formed some kind of support right here. It's actually the 618 level at work, pushing this market at this point. But you taking this trade when it was coming down here, all you have to do is just look to your left and you see at the point which point the market was actually pushing up. It will be at that point. Then you check your 618 level, what number is there? You see 305, you go to your brokers, you see the market 305, you take your 3 minute call. It's as simple as that. You will get this trade. Once you see the market being choppy like this, people don't like trading, but it's an advantage for some of us that knows how to use it. With the tip tool, you can get as many. With this alone, I have counted like more than 10 trades you have with your 600 level, 780. With these two, yes, is very good. So, but I don't use it based on the fib level alone. I use it with the previous support and resistance. It's just like you trading support and resistance too, but market always respect the levels of the fib. Either the 50%, 0.61, those levels are always respected. Even if you go to the higher time frame and you draw a fib, you will always see those levels respected by the market. You will always see. It is always there. It is always there. But a lot of people, where a lot of people have issues, they don't know how to draw it perfectly. Some just get the top and bottom and it will just keep moving like a support and resistance. What they don't know is you don't get the top and bottom, you get the point where it's actually started shooting. To that point, it started consolidating. A lot of people want to get this as a bottom and this as a top. It's just like you getting the support and resistance, right? But what you're actually looking for is that point where it's short of first before you now get the top here. So now, if we check this right now, this is the 4-hour time frame, not even the 5 minutes that we are trading. So I'm just trying to show you that it's the same. Can you see? Can Can you see this? This is actually the 0.5 to 600 level. It was rejected here, rejected here, rejected here, and you can see. So it's just us using this concept on smaller time frame as well, because the market will always move at the same way, whatever the time frame. It's just designed to be like that. You will see it making highs and lows, shooting up, creating support and resistance from the 1 minute to the 2 minute to the 3 minute to the 4 minute to the 1 hour to the daily to the weekly. So that's just it. The issues a lot of people have with film is how to draw it perfectly and get your levels. So with constant practice, that's why I used to advise people having a demo account. You know, if you have your demo account and you're like just using the fee to take levels and take actual trade and see how it's actually going. At times, using the demo account will even help you determine how many minutes will your trade be. Some people are not, some are comfortable with 2 minute trades, some 5 minutes, some 4 minutes. I do 3 minutes doesn't mean you have to do 3 minutes. It was because when I tested all the time frame while I was practicing, 3 minutes was more profitable for me. It might not be profitable for you. So you using tools like this with your support and resistance that we've done earlier, we actually help you know a lot of things. We actually help you and gain a lot of, more knowledge. The more you practice, the more you get. That's just it. There is no cheat code to this. You have to practice. You just have to create time and do it yourself. I just want us to do flip today. We are doing just flip today. Then the next class we'll be doing the Evan Cabral strategy too. This time we are not using the strategy, we'll be using the strategy with support and resistance. The fib itself is a strategy on its own. So using it with support and resistance makes it a perfect strategy on its own. So the Evan Cabral strategy is a strategy on its own. Using it to support and no matter what strategy you're using, always use it with your support and resistance. No matter what strategy. Then I think we'll do the west finger as well. You can see on my west finger here, I actually have an automated support and resistance created. And you can see the market respecting them. What I use the west finger for is just to know the direction of the market. Once you see the blue cloud, you know you're on an uptrend. Once you see the red cloud, you know you're on the downtrend. So we'll do that after the other paper. I want all those strategies to have all the details. So as new students are coming in, they can go through each of these strategies. If they have anyone they are interested in after they tested and they like and they want to develop themselves more on it, and like maybe they have questions, some things are not clear to them. Because like I said earlier, I want you guys to have many things to choose from. Choose your own strategy. What do you think is working more for you? Then develop yourself more on it. There's none of these strategies that is not working. It just depends on how you are dedicating time. How much time you are dedicated to practice with it. See how you can get more profit from it. You always market will act as market once in a while. It won't always go your way. You have a perfect setup. You have a perfect feed level. It should be a previous support. Everything will be right. The market will not just respect it and it will just disrespect it. Times like that will come. That's why I advise people not to go higher than their plan. How many percent are you going per trade? Because it might be that one trade that you are like, okay, let me double my account, let me triple your account. That you're taking the market, it might be that one trade the market decides to just show you that, okay, you can't predict me all the time. And that will always lead to tears. It will always lead to tears. So a lot of people have the goal to grow their account in a week. They want to double it, they want to triple it. It's always lead you to blow your account. As I am right now, I've blown like 4 accounts before I was actually getting my money back from this. I blew like 4. The first 2, I didn't even know what I was doing. I was just like, I was into this area for my big trades up there. The second 2, it was when I was actually trading and I was getting better. I was getting better, and that first one was actually due to this. The second one was the most funniest one because then I actually had a plan. I thought I was disciplined, but I didn't know each time you open your markets like this, you have to fight that discipline every day, every session. It will always come. That mind will come like this one. You are just taking these 5 trades and you are winning all. Why can't you just trade real money? That spirit will always come at you every day. You have to expect it. You can't do see, no matter how disciplined you think you are. It's just like normal discipline, life discipline. Like, okay, maybe you decided to be waking up 5 o'clock every day and you did it for a week and you're like, okay, I think I've gotten this. There will be times the alarm will sound and you'll be like, no, I can't do it today. You have to fight that urge to like do every day. You can't get to a point whereby you think you are fine. It's just the same way with the market. That thinking, that mindset, that greed will always come at you. It's a spirit in the market. So you have to prepare your mind to fight it every day. But with a perfect plan, a perfect strategy, a perfect game plan. Okay, you are going to the 0%. Once I make this certain percentage, I'm off the market for the day. You know, you will actually grow the account more than you even imagine. But if you are in hurry, it will always lead to you growing up. I don't. It might actually work at first. Maybe you tried it like 2, 3 times. Maybe a $500 account, you put 300, you got 250, and you do the account to 1,000. That the moment it's even working for you, we even want you to always keep going that way. And one day the market will just show. I've done an account of $500 within 30 minutes, and it started with a $5 trade. I took the $5 trade I lost. I was like, no, I have to get my money back. I did $15. I lost that as well. So I was like, what's going on? I just went for 50. The 50, and funniest thing is it was on a single trade. It was on a single trade. And that trade, when you take a trade at a resistance, it broke that resistance. So you're like, you get to another point of resistance, like, okay, this will be the point where it's going to go down. This thing just kept breaking all resistance. It was missing. And there was no news. It just kept breaking them. So it's like the market just decided to teach me a lesson that they learned. Then after that, we will not do catch up. Once I've done cash up with that, then the ever cover too. Then I think the basic thing we'll be doing on class now is just for people who have questions about the strategy and the issues they have with it. Then we'll take our normal trade. I think I'll be free by then. I think I'll be free. You can see this was giving a put at a resistance here, but it's not at the point of resistance here. Let me show you something. Using cash crop is that you have to, it's giving you the put already, but it's not yet at this point where the market was rejected. So someone that would have taken the put will be losing right now. But if you can wait for it to get to that point of resistance, which is here, this line right here, you can even see the automated support and resistance that is there is already giving you the line to wait for. That's when you see it's going down. But the arrow is already giving you a quick spot. So giving you a quick spot. So I think that's it. I will just have to make the video so we can all go there and watch. So if you have any questions, we'll put it in the next slide.